Prime Minister Lee Hsien Loong, Senior Minister and Chairman of the Monetary Authority of Singapore, Tharman Shanmugaratnam, board members of the MAS, Emeritus Senior Minister Goh Chok Tong, ladies and gentlemen, good evening and a very warm welcome to the MAS Partners Appreciation Evening. It is a special occasion with the financial community coming together to celebrate, look ahead, and renew partnerships. My name is Yvonne Chan, and I'll be your host for today. Now, before I begin the evening proper, I would like to welcome Deputy Prime Minister Heng Swee Keat, Senior Minister Tharman Shanmugaratnam, and Emeritus Senior Minister Goh Chok Tong. May I invite gentlemen, all of you, to give a big wave and a hello to our audience and our partners tonight. Thank you so much, DPM, SM, and ESM. It is such an honor to have you here with us this evening. Ladies and gentlemen, this appreciation evening brings together a virtual audience from across the industry, and we are so glad to have everyone here tonight as we celebrate the bonds that have been forged over the years. Tonight, we will recognize some of MAS's key partners with the Partners Appreciation Award, and we will also be launching our book, Resilience, Dynamism, Trust, of which you'll be able to access an electronic version of right after the event. So we certainly have a very exciting night planned for you, and I would like to officially kick it off now by inviting Mr. Ravi Menon, the Managing Director of the Monetary Authority of Singapore, to give us his welcome remarks. Mr. Menon, please.
Prime Minister Lee Hsien Loong, Chairman and board members of the MAS, ESM Goh Chok Tong, friends and family of MAS. Welcome to the MAS's 50th anniversary Partners Appreciation Evening, the first in a series of events to commemorate our Golden Jubilee. This evening is a time for Thanksgiving. There are about 50 of us here in the MAS building, and about 800 friends and family of the MAS joining us virtually. Our friends from the financial industry, consumer and governance groups, tripartite partners, academic institutions, and international organizations. And of course, our family, past and present staff, and leaders of MAS, and our colleagues, of course, in the broader public service. This is a special occasion for me, personally. I joined MAS in 1987 and have spent most of my professional career here. So much of what I've learned and how I've evolved, I owe it to the many bosses and colleagues that I've had the honor and privilege of working with in MAS over the years. MAS was already a highly competent organization in 1987 when I joined it, and I've seen it grow over the decades to become what it is today. A central bank and financial regulator, highly regarded among its international peers and the global financial industry. MAS has played a critical role in Singapore's economic development, keeping inflation low, managing Singapore's official foreign reserves, preserving financial stability, and promoting Singapore's development as an international financial center. What MAS has achieved reflects the strategic vision of its past leaders, its chairman and its managing directors, and the deep professionalism of generations of MAS officers. They worked hard to keep our exchange rate strong, our reserves healthy, and our financial system safe yet dynamic. MAS was fortunate in the outstanding leaders it has had. This evening, we are honored to have one of them, PM Lee, address us. PM has a long history with MAS. This is the third time he's speaking at an MAS anniversary. He spoke to us when we were 30 years old, then 40 years. and now when we are 50. I didn't mean to draw attention to your age, PM, but you've been with us a long while. And of course, PM was chairman of MAS from 1998 to 2004, when he spearheaded a series of bold reforms to liberalize the financial sector. But MAS could not have done it alone, even with its exceptional staff and outstanding leaders. MAS has succeeded because Singapore has succeeded. If Singapore's public finances were not strong, our monetary policies would not have worked as well. If Singapore did not have a sound legal and enforcement framework, our regulatory policies would not have worked as well. And if Singapore did not have political stability, good infrastructure, and a conducive business environment, MAS's strategies to grow the financial center also would not have worked quite as well. In a world where central banks typically keep a distance from the rest of government, it is amazing how closely MAS works with other government agencies in Singapore. Macroeconomic surveillance, national economic policies and strategies, combating money laundering risks, investigating financial crimes, promoting jobs, skills development, and labor market policies, advancing technology initiatives ranging from e-payments to digital identity. These partnerships have made a decisive difference to the outcomes for MAS, the financial industry, and to the Singapore economy. MAS has achieved what it has also because of the close partnership it has enjoyed with the financial industry. In a world where many regulators are aloof at best and hostile at worst when it comes to dealing with industry, the relationship MAS has with the industry here is special. To be sure, we are a no-nonsense supervisor. We're not averse to setting high prudential standards, imposing tough remedial measures, and occasionally shutting down a bank or two. But MAS has always believed that working with the industry rather than against it is the best way to achieve our shared objectives, keeping the system safe and growing the business. In this, MAS has been fortunate to have a financial industry, banking, insurance, asset management, and capital markets that has actively supported us through thick and thin. Without you, the financial industry, we would not have the vibrant and competitive financial center that we have today, or the market and digital infrastructures that we have built. You stood with us in crisis after crisis. In 1973, when the Bretton Woods system of fixed exchange rates broke down. In 1985, economic recession, the Pan-L crisis, the closure of the stock exchange. You were with us in 1995, the collapse of Barings Bank from massive losses in derivatives tradings here in Singapore. You were with us in 1997, the Asian financial crisis, and the closure of trading of Malaysian shares on CLOB. In 2008, the global financial crisis, and Singaporean investors lost large sums of money from structured notes like mini bonds. And you did it again last year amid the COVID-19 pandemic and plunge in the economy. In less than 2 weeks of close and intensive collaboration between MAS and the banking, finance company, and insurance industry associations, we put together a comprehensive package of unprecedented credit and premium reliefs. And these helped many individuals and small and medium enterprises ride over a very difficult period of financial stress. We achieved this together, not by regulatory fiat or coercion, or maybe a little moral suasion, but truly in a spirit of cooperation, driven by a shared common purpose. So thank you all so much for the support last year and for stepping up in Singaporeans' hour of need. There is a saying, the face you have at age 20 is the face nature gives you. But the face you have after 50 is a face you earned. MAS's face today, on our 50th anniversary, is perhaps marked with the scars of crises fought and overcome, hopefully also a few lines of wisdom gathered over the years. It is also, we like to think, a radiant face as we look ahead with hope and confidence to push the boundaries of innovation, to make finance more inclusive, more sustainable, and more purposeful, while ensuring it remains safe. Thank you all, and have a good evening.
Thank you very much, Mr. Menon, for that very warm welcome. MAS, a no-nonsense supervisor, working closely with our partners towards a shared purpose. Ladies and gentlemen, without further ado, I would now like to invite our guest of honor for this evening, Mr. Lee Hsien Loong, the Prime Minister of Singapore, to address us. Prime Minister, please.
Chairman and members of the MAS board, distinguished guests, ladies and gentlemen. The Monetary Authority of Singapore came into being 50 years ago. It was conceived as a dedicated organization to carry out the specialized functions of central banking and financial regulation. MAS's responsibilities have expanded considerably since its inception, but its policy objectives remain the same. Low inflation in support of sustained economic growth. Healthy official foreign reserves. A sound financial sector resilient against shocks. And a vibrant international financial center, adding value and creating jobs. MAS has played a major role in Singapore's economic and financial development. Its monetary policies and management of official reserves have sustained macroeconomic stability and confidence in Singapore. Its regulation and supervision of financial institutions have created a safe and internationally trusted financial system. And its development strategies have made the financial sector an engine of growth, attracting investments and creating many good jobs. Key to this was MAS's combination of caution and creativity. It adhered to sound economic principles while creatively adapting policy frameworks to suit Singapore's context. It set high regulatory and supervisory standards while taking a facilitative and risk-proportionate approach. It ensured financial stability while promoting innovation and seizing opportunities. MAS didn't achieve this alone. It shares credit for the success with a broader Singapore system within which MAS operates. It enjoys the political stability, the healthy public finances, good public administration, and the rule of law. These all enabled MAS to pursue its objectives single-mindedly and professionally. MAS also collaborated closely with the private sector, tapping on industry expertise, listening carefully to feedback, co-creating infrastructure and solutions, and jointly promoting the development of financial markets. MAS's approach of marrying caution with creativity and its close cooperation with industry and public sector partners has delivered economic and financial results for Singapore. Let me illustrate how this worked in 5 key episodes spanning the last 5 decades. First, the launch in 1968 of the Asian dollar market. Second, the adoption in 1981 of an exchange rate-centered monetary policy framework. Third, the new approach from 1998 onwards to supervising and developing the financial sector. Fourth, the use of macroprudential measures from the late 2000s to stabilize the property market. And fifth, the decisive move since 2015 to become a smart financial center and leading fintech hub. Let me start with the Asian dollar market. Singapore didn't emerge as an international financial center by chance or natural evolution. We made it happen, starting with the Asian dollar market. This was a bold, creative, and strategic initiative made possible through active collaboration among the government, the MAS, and global industry players. In 1968, Dr. Albert Winsemius, who was then the chief economic advisor to the Singapore government, spoke with his friend, Mr. J.D. Van Oonen, about potential opportunities for Singapore. Mr. Van Oonen was the vice president of the Bank of America branch in Singapore. Showing Winsemius a globe, he explained how Singapore occupied the gap in global trading hours between America and Europe, and therefore was well placed to facilitate round-the-clock trading in currencies and securities. Mr. Van Oonen wrote up a paper on the subject and sent it to Mr. Hon Swee Sen. Mr. Hon was then finance minister, and later he became the first chairman of MAS. Mr. Hon discussed the proposal with Prime Minister Lee Kuan Yew. They decided it was a golden opportunity to develop Singapore as a financial center and seized it. Thus was born the Asian dollar market, to bridge the gap in global markets as well as to finance the growth of the region. The timing couldn't have been better. Asia was rapidly industrializing. Singapore seized the opportunity to channel global savings into investments in the region. And this was even before the birth of MAS. Once MAS was created, it lost no time collaborating with the industry and with the Ministry of Finance to promote the trading of foreign currencies out of Singapore. To prevent the flow of funds into the Asian dollar market from disrupting domestic monetary management, MAS created the Asian Currency Unit, ACUs. This was a novel booking account to allow banks to accept deposits and lend in non-Singapore dollars. MOF supported MAS by granting a concessionary tax rate of 10% on all offshore income earned by banks' ACUs. Over the next decade, MAS gradually dismantled foreign exchange controls and widened the scope of ACU operations. Eventually, all exchange controls were eliminated, enabling residents and corporations in Singapore to transact in all currencies without limits. The Asian dollar market earned Singapore a place on the global financial map. This was the spark that ignited Singapore's growth as a regional and international financial center. Today, with total assets in the Asian dollar market exceeding $1.4 trillion, Singapore is the world's third largest forex center after London and New York. The second key episode was the adoption of an exchange rate-centered monetary policy. Initially, MAS managed monetary, credit, and exchange rate conditions through an eclectic toolbox of instruments like interest rates, reserve ratios, credit ceilings, and even moral suasion. But this approach proved inadequate in the face of accelerating global inflation. MAS needed a fresh framework. At that time, monetary thinking held sway. The world's leading central banks were extolling the virtues of controlling money supply to tame inflation. But Dr. Goh Keng Swee had very different ideas. Given Singapore's small and open economy, he felt that the exchange rate was a more important anti-inflation instrument. In 1980, Dr. Goh became chairman MAS. In 1981, MAS adopted an exchange rate-centered monetary policy framework. It was the first central bank in the world to do so. Until today, Singapore is the only country to explicitly use the exchange rate to control inflation. Our unconventional approach stemmed from a clear understanding of Singapore's uniquely open economy and the courage to depart from conventional thinking. But MAS also knew that allowing the Singapore dollar to float freely risked destabilizing the economy. Hence, MAS operated neither a float nor a fixed peg, but a managed float. Our balanced approach has been labeled by economists as the BBC system, comprising a basket, band, and crawl. This approach has worked for us. It's ensured that the value of the Singapore dollar against a basket of currencies appropriately reflected economic fundamentals. And Singaporeans have enjoyed over 4 decades of low and stable inflation. This success also reflects the government's ethos of fiscal prudence and long-term orientation. In many developing countries, monetary policy has been a handmaiden of lax fiscal policies. When their central banks print money to finance persistent budget deficits, the result has been high inflation and economic instability. Advanced countries have largely opted for central bank independence to insulate monetary policy from political interference. This has its merits, but it's not a panacea for all macroeconomic problems. Even independent central banks have been financial fiscal deficits in recent years, so as to keep interest rates low. It enables government debts to keep growing, but in the long term, it risks financial instability. Singapore has adopted a different approach. Our constitution requires the government to keep a balanced budget over each term of office. The question of monetary financing does not arise. Prudent fiscal policy and a consistently healthy budget position has absolved MAS of the need to finance government spending and allowed it to focus on its primary mission of price stability. The relationship between MAS and MOF is neither cozy nor frosty. While MAS does not enjoy statutory independence, it has full autonomy over monetary policy, just as MOF has over fiscal policy. Yet they consult each other closely in managing financial crisis and ensuring overall economic stability. And because of that, we have an overall coherence across our monetary and fiscal policies, and that fosters economic and financial stability. The third key episode began in the late 90s, when MAS launched a series of groundbreaking reforms in the way it supervised and developed the financial sector. From the beginning, MAS had taken a conservative stance towards regulating banks and financial institutions, which had served us well. But the world was changing, and the industry was changing too. Financial markets and funds flows were becoming increasingly globalized. Competition between financial institutions was growing more intense. New business models were gaining traction. Singapore risked falling behind in the face of advances in technology and banking practices. At the same time, new risks were emerging. Indiscriminate deregulation could easily have led to serious mishaps, as indeed happened elsewhere. It was time to shift gears. But it was a very delicate shift to make. How to liberalize and promote competition and innovation while safeguarding financial stability. In other words, how to become less cautious, but in a careful way. External conditions this time were not propitious. In 1998, the Asian financial crisis had just broken out. Financial systems across Asia were coming under severe strain and battening down their hatches. But our economy and financial system were sound. And so we decided to turn adversity into opportunity and press ahead with our liberalization program in the teeth of the storm. MAS planned and executed a series of careful steps. Individually, each step was carefully calibrated. But taken together, they made up a bold and coherent program to comprehensively liberalize the financial sector. Retail banking was further opened up to foreign competition. In the insurance industry, limits on foreign shareholdings were removed. In stockbroking, fixed commissions were abolished and foreign players allowed free entry. The stock and derivatives exchanges were demutualized and merged to form SGX. In making this bold shift, MAS benefited greatly from private sector insights and experience. Many creative ideas came from the Finance and Banking Competitiveness Subcommittee under MTI's then review, the Committee on Singapore's Competitiveness. It was chaired by Mr. Peter Seah, who was then CEO of OUB, Overseas Union Bank. I told Peter Seah's committee, if all your proposals are accepted, it probably means that you've not been radical enough. And they did not disappoint. MAS also updated the way it regulated and supervised financial institutions. It moved away from one-size-fits-all prescriptive regulation towards a more tailored supervisory approach. It required local institutions to build up their own risk management capabilities. In regulating capital markets, it shifted from a merit-based to a disclosure-based approach. Even as MAS liberalized the financial sector, it made sure to maintain and improve a sound and effective regulatory framework. We kept bank capital requirements stricter than global minimum standards. We imposed bank liquidity requirements even before there were similar international standards. We made every major regulatory move in close consultation with the industry to ensure that it was progressive, risk proportionate, and responsive to the needs of the market. These reforms paid off. Today, we are a vibrant financial center, international financial center, anchored by a strong and competitive core of Singapore institutions, as well as foreign players deeply rooted in Singapore. Our financial system has also proved resilient. We safely rode out the 2008 global financial crisis, and more recently, the financial system has provided stability and support for our economy amid the COVID-19-induced recession. The fourth key development was MAS's active intervention to ensure a stable and sustainable property market. This started in the late 2000s right through till today. Ever since the 2008 global financial crisis, global interest rates have been at historically low levels as major central banks implemented extraordinary monetary easing to support economic recovery. But this has fueled excessive risk-taking and yield-seeking financial flows into asset markets. In Singapore, the low interest rates and abundant liquidity made themselves strongly felt in rapid overheating of the residential property market. MAS's macroprudential response to these pressures was atypical of most central banks on two counts. First, while most central banks solely focus on stabilizing consumer prices, MAS proactively moderated fluctuations in private property prices. It took calibrated steps spread over several iterations to avoid causing sharp market corrections. MAS intervened because of the systemic importance of the property market for the health of the household balance sheets as well as the banking system. Second, while most central banks eschew coordinated policy actions with other government agencies, MAS collaborated actively with MOF, the Ministry of National Development, and the Urban Redevelopment Authority in its macroprudential actions. This coordinated whole-of-government approach allowed the agencies to share property market data, surveillance insights, and analysis to form a holistic picture. It provided an effective suite of mutually reinforcing policy tools across these agencies. MAS imposed loan-to-value and total debt servicing limits. MOF imposed stamp duties on property purchase. MND and URA implemented supply-side measures. These proved a potent combination in cooling and stabilizing the property market, and in the process, safeguarding financial stability. The fifth key development was MAS's move to make Singapore a smart financial center. The mid-2010s saw the advent of fintech, non-financial players using technology to offer innovative financial services solutions. This development looked set to disrupt the financial industry. MAS knew that a smart nation also needed to be a smart financial center. Hence, MAS was one of the earliest financial regulators globally to promote fintech and lay the foundations for a digitally advanced financial center. But even as it welcomed innovation, MAS also made sure that regulations kept abreast of the risks. MAS launched a fintech regulatory toolbox, sandbox, in 2016 to test new technologies and business models quickly within specified boundaries to avoid risks spilling over into the wider financial system. It provided early regulatory guidance on new areas such as cloud computing, robo-advisors, and digital payment tokens to allow these activities to flourish in a safe manner. It also issued mandatory requirements on basic cyber hygiene to all financial institutions to strengthen cyber resilience. None of this would have been possible without close partnership with the financial industry, fintech community, with the institutions of higher learning, and of course, the rest of the government. Among all of MAS's strategic moves, this digitalization journey was perhaps also its most collaborative. This collaborative spirit underpinned MAS's efforts to build up-to-date digital infrastructure. For instance, MAS worked closely with the banking industry to build FAST, a 24/7 real-time interbank fund transfer system. MAS and the banks then built PayNow on top of FAST. This made e-payments seamless. Now, anyone can pay anyone else using just a mobile number or unique business identifier. Fast and easy. MAS also partnered GovTech to expand the MyInfo service to the financial industry. Banks could remotely open accounts for their customers using government-verified personal data while ensuring proper due diligence. Convenient, yet safe. Meanwhile, MAS continued to take an open approach towards new players and operating models. It granted non-traditional payment service providers access to FAST. It issued licenses to digital-only banks to add value, diversity, and choice to the financial sector and economy. It experimented with blockchain-based cross-border payment and settlement systems in collaboration with several financial institutions, tech partners, and other central banks. Thanks to MAS and its partners, Singapore is today a leading global fintech hub, home to more than 40 innovation labs belonging to global financial institutions and 1,400 fintech firms. These 5 examples from MAS's history highlight its brand of creativity and caution. Looking ahead, we see emerging disruptive technologies such as artificial intelligence, blockchain, and the Internet of Things. New business models such as decentralized finance and the use of crypto assets, as well as climate change and the transition to a low-carbon economy. MAS will again need the optimal blend of creativity and caution as it deals with these challenges and creates new opportunities for our financial sector and economy. These examples also remind us that behind MAS's success lies a story of partnership and trust, forged with the industry and stakeholders over 50 years. This partnership and trust will become more critical and relevant than ever. It's therefore fitting that to celebrate its half-century, MAS is showing appreciation for key partners who have worked alongside it all these years. You've been a huge part of MAS's success. Thank you very much. Let me also dedicate MAS's success to the hard work and professionalism of the generations of leaders and staff who have served with dedication and distinction. You've done the public service proud. The journey ahead will be as challenging as ever. But I'm confident that the MAS team, together with support from our industry, will continue to deliver on its mission faithfully and successfully. Congratulations, MAS, on your 50th anniversary. Thank you very much.
Thank you very much, Prime Minister, for that very insightful speech. Indeed, numerous important connections and mutually beneficial bonds have been forged with our partners right here. And it is this sort of relationship that allows us to sustain and support one another in the finance sector amid these volatile times. Now, ladies and gentlemen, to mark the special occasion of MAS's 50th anniversary, we would like to take a look back with gratitude for our many partners that have worked closely with the MAS to build Singapore as a financial sector to what it is today. MAS would like to express its appreciation to its partners with a video, one that will take us down memory lane by recounting some of these significant milestones over time. Please enjoy.
Fiftieth anniversary is very, very significant milestone for the organization as well as for me personally. Each step of the way, I've also been exposed to working very, very closely with financial institutions and various industry associations to help grow Singapore as a financial center. So this is a very important milestone.
Our journey to get here has not been easy or smooth, but the trust and close collaboration between MAS and you, our partners, have helped us to overcome past financial crises together, to build strong growth and collectively develop one of the world's leading and vibrant financial services hub. In these unprecedented times, the need for us to collaborate, work closely together, achieve bigger things together is all the more important.
Our partnerships have grown in strength and importance over the years, and this has enabled us to build a robust and resilient financial center, one that is trusted, inclusive, and innovative, underpinned by a skilled and competent workforce. At the heart of our financial center is our people. Talent is the lifeblood of any leading financial center. We are grateful to you, our partners, for developing high-quality training and skill certification programs to help groom and grow our local talent pipeline. So we also want to give special thanks to our MAS advisory panels and committees. These comprise international industry experts and thought leaders who give valuable advice and insights on key areas such as financial sector growth opportunities, fintech and innovation, cybersecurity, reserves management, as well as the design of Singapore's currency notes and coins.
Our regular dialogues and consultations with industry has enabled our regulations to remain risk-focused, robust, and yet supportive of business and innovation. So it is with this spirit that our industry has come together over and over again to collaborate on issues, to resolve differences, and to find solutions for ourselves. Many industry best practices were established and upheld in this manner. Following the 2008 Lehman mini-bond saga, there was a real need to raise the standards of practice in the financial advisory industry. A panel of experts was formed, chaired by MAS, to do a thorough review of the standards. And this led to a multi-year fair review, as we call it. Through extensive consultations with partners, industry experts, FAIR resulted in a wide-ranging set of recommendations for the industry. This included mystery shopping exercises, as well as the balanced scorecard remuneration framework. Today, these initiatives continue to foster good standards of practice and raising confidence and trust of consumers in the industry. A financially savvy consumer is an empowered consumer. Over the years, MoneySense has broadened in our outreach from conducting seminars and workshops to leveraging on social media platforms to make money matters simple for all Singaporeans.
With the help of MAS, we select very good instructors, teachers, and the topics are very, very relevant, contemporaneous, and helps investors to understand issues relating to investments clearly, and they are able to focus better when they make informed decisions. The partnership with MAS has been very important, and in this respect, we find this collaboration very meaningful.
When international standards and market conditions change, it is necessary that we react quickly and effectively to adapt. So for example, the discontinuation of the US dollar LIBOR, this has made it necessary for the markets to transition to SORA as the new Singapore dollar interest rate benchmark. We are grateful for the close partnership we've enjoyed with the industry in this very complex transition.
The committee has been a close partnership over multiple years as financial centre development has taken twists and turns. Through the 2000s, we focused on professional market conduct and the adoption of the FX Code of Conduct from the global GFC. The strengthening of the FX ecosystem through the 2000s included increasing the professionalism of the industry through training of human resources across the financial markets, together with accreditation and examination. This has clearly brought the standard of capability in the professional organisation within the industry in Singapore to a different level.
Over the years, together with MAS, we have built a collaborative, constructive relationship working based on mutual trust and open communications. Together, we have weathered several financial crises and also gone through this COVID-19 pandemic.
When COVID-19 disrupted economic activity and daily life as we knew it, our immediate response was to support individuals and businesses that were facing temporary cash flow challenges. We reached out to key partners to brainstorm and to recommend relief measures, providing the reprieve that was very much needed at that time.
As we enter the new normal post-COVID-19 pandemic, there will not be business as usual. There will be a big shift in how financial services will be produced and consumed.
The financial industry is transforming rapidly, and we appreciate working with you to see how we can continually reinvent ourselves and become a smart financial center.
Through a collaborative effort between MAS, the financial institutions, and the innovators, today we see financial services that are more customer-centric, more interesting, and more dynamic for the end users and for the businesses.
We need to constantly reinvent ourselves in order to be an exceptional financial center. SG Findex is the world's first public digital infrastructure to allow individuals to access their financial information in a consolidated way. The other world-first project is the development of the API Exchange, which is a cross-border open architecture API marketplace and sandbox platform. Project Ubin, which explored the use of blockchain and distributed ledger technology for clearing and settlements of payments and securities. Veritas Initiative to promote the responsible adoption of artificial intelligence and data analytics. So all these projects fully demonstrate the power of public-private sector collaboration, helping to co-create solutions and bringing ideas to full fruition. Looking in the future, as a financial hub in Asia, we have an opportunity to become a financial center that can be a force for the good. We greatly appreciate the contributions of our partners in initiatives to increase the resilience of our financial sector to climate change and advance our role as a regional hub for sustainable finance.
I wish MAS in its initiatives, especially to educate and empower our citizens, all the very best, and we hope that this partnership will continue for many, many more years.
From a personal point of view, my 23 years working in the financial industry in Singapore has been both enjoyable and personally rewarding. And a large part of that is really the collaboration with the MAS and the industry. Thank you for all the support and a happy 50th birthday.
On behalf of the Council, member banks and ABS staff. Thank you, MAS, for the great partnership that we have together all these years, for the recognition and the support. Time flies. Happy 50th anniversary.
I look forward to the continued partnership to co-create the future of financial services for Singapore and for the world, together with MAS. Thank you for your support and happy 50th birthday, MAS.
To our cherished partners, thank you for your 50 years of unstinting support and partnership. We would not have come so far without you.
Very much looking forward to forging ahead together in the next 50 years to build the future of financial services for Singapore.
Ladies and gentlemen, it is now with great pleasure that we commence the award ceremony this evening. Now, the MAS Partner Appreciation Award recognizes 17 of MAS's key partners who have worked closely with MAS over the years and made significant contributions to Singapore's financial sector. I would now like to invite Mr. Lawrence Wong, the Minister of Finance and the Deputy Chairman of the Monetary Authority of Singapore, to come on stage to present the awards tonight. Welcome, Minister. All right, without further ado, I would like to invite our first awardee for this evening, Mr. Shadab Tayyabi, the President of the Singapore FinTech Association, to come on stage to receive the Partners Appreciation Award. The SFA was formed in 2016 as a cross-industry and non-profit organization to support the development of Singapore's fintech industry. Key collaborations with the MAS include the MAS SFA AMTD FinTech Solidarity Grant and the SFA FinTech Certification Program to support Singapore-based fintech companies amidst these challenging times. Thank you very much, SFA and Mr. Tayyabi. Next, we have Mr. Barakat Ali, Chairperson of the Remittance Association Singapore, or RAS. RAS was formed in 2014 as an association that brings together remittance licensees supervised by MAS. The RAS has helped to smooth transitions to the new Payment Services Act. It has also helped to improve risk management and governance standards of the industry through regular training sessions. Thank you very much, RAS and Mr. Ali. Coming up, we have Mr. August Hateke, co-chair of the Private Banking Industry Group. Established in 2010, Private Banking Industry Group, or PBIG, comprises senior private banking leaders and is co-chaired by the MAS and industry representatives. PBIG was instrumental in introducing self-regulation to the private banking industry through the implementation of the Private Banking Code. And most recently, PBIG launched the Build, Encourage, Nurture work-study internship initiative to groom our local talent pipeline for the private banking industry. Thank you very much, Mr. Hateke and PBIG. And next, let's welcome Ms. Eunice Chua, the CEO of the Financial Industry Disputes Resolution Centre, or FIDRAC. FIDRAC was set up in 2005 as an independent institution that provides a low-cost avenue for consumers to resolve their disputes with financial institutions through mediation and adjudication. In collaboration with the Subordinate Courts of Singapore, General Insurance Association and MAS, the FIDRAC Non-Injury Motor Accident Scheme was launched in 2008 to offer consumers an effective and affordable way of resolving low-value motor accident claims. Thank you, FIDRAC and Ms. Chua. Next up, let me invite Ms. Tan Hui Min, the General Manager of Credit Counselling Singapore. Credit Counselling Singapore, or CCS, is an independent non-profit organization social service agency which has helped many individuals address their unsecured debt problems since 2004. With the support of the Association of Banks in Singapore, Monetary Authority of Singapore and Enterprise Singapore, CCS launched the Sole Proprietors and Partnerships Scheme to help SMEs affected by COVID-19 to restructure their debts. CCS also works closely with the MAS to promote consumer financial education through its Money Sense program. Thank you very much, CCS and Ms. Tan. Coming up, we have Ms. Melinda Sam, the CEO of the Securities Association of Singapore. Securities Association of Singapore, or SAS, was established in 2001 and represents the interest of the stockbroking industry. SAS has worked closely with MAS on regulatory and developmental initiatives such as issuing industry guidelines on MAS's requirements and proposing plans to build a more vibrant market for retail investors in Singapore. Thank you very much, Ms. Sam and SAS. I would now like to invite Mr. Augustine Lee, President of the Association of Financial Advisors Singapore. Association of Financial Advisors, or AFAS, was established in 2001 to represent the interests of licensed financial advisors. Key collaborations include the Financial Advisory Industry Review, or FAIR Panel, raising financial advisory standards. AFAS also helped to build an industry platform for online submission of insurance policy applications to insurers and participated as an expert panel member for MAS's mystery shopping exercise. Thank you, AFAS and Mr. Lee. Up next, let's welcome Mr. David Gerald, President of the Securities Investors Association Singapore. Securities Investors Association Singapore, or SIAS, was founded in 1999 to promote investor education, corporate governance, and transparency, and it is an advocate for investor rights in Singapore. It is also the largest organized investor group in Asia, with almost 71,000 retail investors as members. SIAS works closely with MAS on retail investor education and advocacy, such as organizing My Money investor education seminars and Beware investment scam campaigns. Thank you very much, SIAS and Mr. Gerald. Next, we have Ms. Carmen Wee, CEO of Investment Management Association of Singapore, otherwise known as IMAS. IMAS was established in 1997 to spearhead the development of the investment management industry in Singapore. Now, in recent years, IMAS partnered MAS to organize an industry group that co-created the Environmental Risk Management Guidelines, or the ERMG, for asset managers. IMAS also worked together with the Worldwide Fund for Nature to promote the adoption of ESG practices in the investment management industry. Thank you very much, IMAS and Ms. Wee. And next, let me invite Mr. David Lin, the co-chairman of Singapore Foreign Exchange Market Committee. Singapore Foreign Exchange Market Committee, or the SFEMC, was established in 1986 and has played a pivotal role in developing Singapore into Asia's largest forex center, which includes enhancing the indicative survey rate. The committee has continued to drive key developments in Singapore's financial markets, such as the SOAR-to-SORA transition and the entrenchment of the regional FX e-trading ecosystem. Thank you very much, SFEMC and Mr. Lin. Now let's welcome Mr. Jeffrey Yeo, the Executive Director of the Singapore Reinsurers Association. Singapore Reinsurers Association, or SRA, was established in 1979 to represent members in matters affecting their business interests and to advance the reinsurance industry in Singapore. SRA was a key member of the Contract Certainty Work Group that provided expertise and resource in establishing and maintaining reinsurance contract certainty principles in Singapore. Thank you very much, SRA and Mr. Yeo. Coming up, we have Mr. Ng Nam Sin, the CEO of the Institute of Banking and Finance. The Institute of Banking and Finance, or IBF, was established in 1974 as a non-profit industry organization to foster and develop professional competencies of the finance industry. During the course of COVID-19, it was with IBF's strong support that the financial sector saw an increased participation in training, which in turn created 2,200 net jobs in 2020 alone. IBF has been appointed the Jobs Development Partner, or JDP, for the financial sector last year to further boost Singaporeans' access to jobs and training in the sector. Thank you very much, IBF and Mr. Ng. Now let's welcome Mr. Wee Ee Cheong, Chairman of the Association of Banks in Singapore. Association of Banks Singapore, or ABS, was established in 1973 as a non-profit organization representing the interests of the commercial and investment banking community. ABS is also MAS's key partner in steering the transition of Singapore's interest rate benchmark in Singapore dollar from the SOR and SIBOR to the SORA. With the strong support of ABS, MAS has rolled out several industry-wide digital initiatives such as SGQR, PayNow, and the API Playbook. Recently, ABS has also collaborated with the public sector to develop SG Findex. Thank you very much, ABS and Mr. Wee. Coming up, we have Ms. Lee Xiao Hui, the Executive Director of the Consumers Association of Singapore. Consumers Association of Singapore, also known as CASE, was established in 1971, a non-profit, non-governmental organization that is committed to protecting consumers' interests through information and education, while also promoting an environment of fair and ethical trade practices. One of their key collaborations with MAS, together with the Life Insurance Association of Singapore and MoneySense, was the launch of the Compare First web portal. Thank you very much, Case and Ms. Lee. Now let's welcome Mr. Lee Ziliong, the Honorary Secretary of the Finance Houses Association of Singapore, or FHAS. Established in 1968, MAS regularly engages FHAS on matters relating to finance companies. During the COVID-19 pandemic, FHAS worked closely in partnership with MAS in the banking sector, supporting the rollout of debt relief measures, helping individuals and small businesses with cash flow difficulties. Thank you very much, FHAS and Mr. Lee. Next, I would like to invite Mr. Ho Kai Wing, the Chief Executive of the General Insurance Association of Singapore, or GIA. Established in 1966, GIA works to make all aspects of general insurance easier and more effective for consumers, agents, and insurers. GIA has worked closely with the MAS to implement developmental initiatives such as the ERMG and jointly established the Insurance Culture and Conduct Steering Committee with MAS to raise standards for the insurance industry. Thank you very much, GIA and Mr. Ho. Last but certainly not least, let's welcome Ms. Pauline Lim, the Executive Director of the Life Insurance Association, or LIA. Registered in 1962, LIA is a trade association of licensed life insurers and reinsurers that represents the interests of the life insurance industry. LIA has worked with MAS on various initiatives and has also developed industry best practices and developed consumer guides and tools. More recently, in order to ease the financial difficulties of policyholders caused by the COVID-19 pandemic, LIA mobilized the industry to support policyholders with a deferred premium payment scheme. Thank you very much, LIA and Ms. Lim. Thank you. And thank you very much, Minister Wong, for presenting the awards to all our partners tonight. Whew. All right, let's give another big round of applause to thank our awardees and appreciate them for their collective contribution to Singapore's financial sector. Don't you just miss the sound of physical instead of virtual applause? That was so nice. Thank you very much. Ladies and gentlemen, it has been 50 years since the MAS was formed. And as a token of tribute to recognize this journey, it is my privilege and honor to unveil our book, Resilience, Dynamism, and Trust. It is a book comprising 50 impactful, insightful, and inspiring quotes from financial trailblazers through the years. Now, before we get to that, let's hear from Senior Minister and Chairman of the Monetary Authority of Singapore, Mr. Tharman Shanmugaratnam. Senior Minister, please.
PM Lee, ESM Go, DPM Heng, and colleagues at the MAS. I'm very happy to join you virtually today for this important milestone event for the MAS. The book that we are launching today, comprising 50 landmark statements, tell a very interesting story of how the MAS built up credibility over the 5 decades. Credibility as a central bank, credibility as a financial supervisor, and credibility as a partner with industry in developing a financial center. As the book tells it, we've gone about it partly by learning from the best, particularly in our earlier years, but also by doing things in our own way. In our own way, principally because our circumstances are different from many other financial systems. We are a very small place, but very open, and playing global and regional roles. In other words, we are small, but not small in our ambitions and our role. And this unusual set of circumstances has required a different way of thinking about monetary policy, financial supervision, as well as our way of coordinating with the rest of government. In monetary policy, perhaps most distinctly, we've taken a different view, using the exchange rate as our instrument of policy, but also not going for the extremes of exchange rate management. We've chosen a middle path of a managed float of the Singapore dollar. That has worked well and is now seeing more adherence around the world, particularly in Asia. In financial supervision too, we've taken a unique path. We have an unusual reputation of being more strict than most financial regulators as far as prudential matters are concerned, but also more facilitative of business development and more proactive in developing the financial sector. And we have found it possible to not only balance these two objectives, but to marry them. And it's precisely because we were early conservatives in financial regulation that we've also been able to liberalize, open up to competition, most especially during and in the wake of the Asian financial crisis, when the MAS opened up the financial sector whilst many others were hunkering down. We are also unique in our view of central bank independence, and the book tells the story as well. We have never viewed it in rigid or formalistic terms. The central bank has to be independent in its monetary policy, in its supervision of individual institutions. But when it comes to managing major crises, and when it comes to ensuring overall financial stability, for instance, the property market, ensuring the stability of the property market, the MAS has always found that it makes a lot of sense to be part of a coordinated government effort with the Ministry of Finance, the Ministry of National Development, and others. And that whole of government approach has served Singapore well and will continue to serve us well. We have not found that collaboration with the rest of the government erodes the MAS's independence where it really counts, in monetary policy and in financial supervision. Finally, I would say that we are somewhat unique in the sheer range of MAS's functions. We started off very narrow, in fact narrower than most central banks. But we've since grown our range of functions to be a fully fledged central bank, as well as an integrated financial regulator, banking, insurance, securities, the capital markets, and a proactive partner with industry in developing a financial center. And that range of functions is quite unique. I would say it's also how we've developed our people, because it's precisely that range of functions that has allowed successive managers and leaders in MAS to groom their skills, develop broad perspectives of their work, and gain experience that is invaluable as they move from one function to another. If you look at our recent cohorts of leaders, Ong Chong Tee, Teo Swee Lien, Ravi Menon, the current MD, they've benefited greatly from going through a rotation of functions within the organization. And that has been an advantage. I should add, by the way, myself as well. I spent 17 years as staff of MAS, going through different functions before finally becoming the MD. So the book tells the story of the unique path we've taken, why we've taken it, and the principles on which we have based our approach. But I want to thank our partners in industry who have grown together with us, from whom we have learned and changed our posture over time from learning from our partners. It's a partnership which remains relevant as we move into an even more challenging future. More competitive, more disruptive in many ways, but we will grow together and maintain the stability of our financial system at the same time. I want to thank, most especially, the successive leaders and colleagues at the MAS who have made it what it is today. Trusted, credible, and always learning. Thank you very much.
And now, ladies and gentlemen, please join me in welcoming Mr. J.Y. Pillay and Mr. Koh Yong Guan, our former managing directors of the Monetary Authority of Singapore, up on stage to help us launch our 50th anniversary book. Mr. Koh, Mr. Pillay, please. Hi, Mr. Koh. Hi, Mr. Pillay. It's right over here, sir. Just there. Yep, we've got your names on there. Okay, so on my count of 3, 2, 1, I'd like to invite each of you to put your hand on that golden orb just behind you, Mr. Pillay. Yep. Okay, together. All right? Okay, in positions now, gentlemen. And on my count of 3, 2, 1, Mr. Pillay, Mr. Koh, kindly place your hand on the golden orb, please. And could I have you look at the camera so that we can capture your smiling faces for this launch? very much, Mr. Pillay, Mr. Koh. May I invite you to take your seats, please? Okay, well, not to worry. If you didn't manage to catch that QR code, it will be made available right after our live stream again for you to download it. But I did hear a few Twitters of, oh, I've got it. Yes, oh, you have to download it. And we want to just thank once again Mr. Koh and Mr. Pillay for launching our 50th anniversary tribute, Resilience, Dynamism and Trust. Thank you very much, sirs. As Mr. Pillay was walking down the stage, he smiled very broadly. We could see it in his mask, and he said, I survived that. You certainly did, sir. Thank you very much for helping to launch our book this evening. Well, ladies and gentlemen, we have come to the end of this appreciation evening. It has been my pleasure to be your host for such a meaningful event. And on behalf of everyone here at the MAS, we'd like to thank each of you for your valued partnership. And here's to another 50 years of fruitful collaboration and beyond. I see a double thumbs up from Miss Teo, definitely, yeah. Once again, thank you so much for joining us. We wish you a pleasant evening ahead. Stay safe and keep well. We will see you next time. Goodbye.